Hello and welcome to Business Today. I'm Siddharth Zarabi and you're watching Easynomics. Today we discuss the topic of the Indian rupee. A rupee that some people say is in free fall, and also a section of opinion which says that the rupee is only reacting to changes in the fundamentals and therefore there is nothing much to be surprised about. But as I speak, the rupee has closed at 77.32, and very clearly this is something that uh, wasn't expected, at least for the general public. And the decline, the record low that was witnessed of 77.46 to the US dollar, was a significant decline. And this recovery that we have seen is perhaps on account of action by the central bank. Now, why is the rupee falling? Who benefits and who suffers any negative consequences, and how long will this continue? If these are some of the questions that you have in mind, let's try and deconstruct it, simplify it for ease of understanding. The first thing, a rupee in any economy, a currency in any economy, reacts to flows. And what is happening to the Indian rupee is also in part a reflection of flows. Now, what is happening to flows? I'm referring to fund flows on account of the pullout from the Indian stock market by foreign institutional investors who typically always have had a significant role to play in the Indian stock markets as portfolio investors. From January to date, institutional investors, overseas investors have pulled out well over 1,32,000 crore from the Indian market. So when you have so much money that's being taken out, you obviously see pressure on the exchange rate because the investor converts what he realizes in Indian rupees into his specific currency, and the US dollar is the reference currency, even if the investor originates from a non USD domain. The US dollar is the international reserve currency. The second impact that typically happens as far as the Indian economy is concerned is due to what happens to crude oil. Now, we have seen crude oil being volatile, it has swung, it went up significantly, the consequences of the Russian invasion in Ukraine, and that also exerts some amount of pressure on the exchange rate because oil companies, our refiners, those who import crude oil, and we are dependent to almost 95, 97% on imported crude for fulfilling our energy needs, they buy dollars in bulk to pay international suppliers. Now, we've seen there are regular deals and there are sometimes deals that happen if crude oil prices are falling. We know in a separate context that India had increased its purchases of Russian crude oil after Russia offered that crude oil to us on a discount. These are a couple of the major reasons. As far as the Indian economy and its fundamentals are concerned, there is no currency crisis per se. Unlike certain other economies, as well as if you go back into the past, what has happened to some economies, what is called the East Asian crisis, all of those are different. The reason I'm trying to explain this at such length is please do not make the mistake of confusing it and perhaps reading a bit here and bit there and concluding that there is any that the exchange rate movement reflects something that is deeply wrong with the Indian economy. There are challenges, of course. I told you about two aspects which are routine developments in a way, and both are external factors. The real challenge is inflation and what it does to domestic pricing power in the country. Now, inflation again here in India is a supply side phenomenon. In part, it was fueled by what happened to crude and the prices that were passed on after a long gap, and we saw a sudden spike. Now, petrol and diesel prices are flat for well over a month now. We don't know if they will change in the future, but again, that spike seems to have leveled out. Now, that's separately as far as inflation is concerned. But due to what is happening globally to the commodity cycle internationally, and certain specific commodities which have been impacted due to the Ukraine disruption to trade, as well as the disruption that's happening within China's manufacturing ecosystem on account of its massively restrictive steps to try and contain COVID, which is impacting production to a significant extent. For example, Tesla, as the leading electronic car maker in the world, has suffered the consequences of a drastic shutdown in Shanghai. Again, this is for you to understand the global sort of factors that are leading to the currency volatility. Now, where does that leave us? Point number one, it is the Reserve Bank of India, the central bank as it is called, the monetary authority, that is primarily responsible for ensuring exchange rate management. Among the various mandates, and there are three key mandates which are in some ways referred to as the impossible trinity in economics: exchange rate management, price stability, and growth. Now, exchange rate management is a significant duty of any central bank, and the Indian central bank more so. There was a time in the 90s prior to our reforms when our foreign exchange reserves had dipped to precarious levels, and some of you here would perhaps recall that as students or as people who read it in the newspapers then, of what happened. I was in school and I also recall some of those headlines faintly, and we fixed that. And that's why I said structurally today, India should not be compared with any of those past episodes and not be compared with some of those economies that suffered during that period. But when it comes to exchange rate management, the Reserve Bank of India, which has currently our foreign exchange reserves, which the RBI holds and the RBI alone holds, are close to $600 billion when stated in US dollar terms. Any country's foreign exchange reserves are cash and sometimes in kind, and that kind is gold. Now, again, that's a separate subject which I can perhaps discuss with you on Easynomics some other time. But any central bank, just like the Indian Reserve Bank also, holds various currencies in its foreign exchange reserves basket. They are stated for public consumption in US dollar terms. So we have one of the largest foreign exchange reserves in the world. $600 billion is a very, very large foreign exchange reserve. So hypothetically speaking, if the Reserve Bank needs to ensure, and we know that the Reserve Bank of India doesn't publicly talk about what it sees as a level for the rupee. Now, this is a subject that not everyone would be interested in, but I have tried with various people from the Reserve Bank over my reporting career, or even a North Block where the Union Finance Ministry sits, to try and get them to talk in different episodes over the past so many years, to get them to talk about a level for the rupee. No one actually gives you a level for the rupee, because the rupee, after we sort of freed it up from all controls and a managed exchange rate, we went to a market determined free float kind of exchange rate, and our rupee is also significantly convertible, although it is not fully convertible. No one talks about a level at the Reserve Bank, but we know from market movements, from witnessing daily data. For example, today there was a 20% increase, a reversal in the trend in the rupee, and a lot of experts say that that's because of bulk buying, because the largest buyer or seller is always the Reserve Bank of India, which uses it to sort of control or try and ensure that the Indian currency remains in a certain range, whatever that range be. Now, the last part of my conversation with you, and most of you would understand this, and you would have been touched by exchange rate volatility in different ways. If you are a parent whose child is studying overseas, this exchange rate decline will impact you in a certain manner. You will have to pay more rupees to buy the same amount of dollars to send to your child. If you are an exporter who's sold and dealt with in dollars and has dollars parked in an account which need to be converted into Indian rupees, you stand to gain, because beyond the margin that you had made on your transaction, there is a currency gain that you stand to see. Our oil marketing companies, our refiners, those who import crude oil will face pressure, because they will have to shell out more rupees to buy the same amount of dollars to pay for crude oil, which in itself is behaving a little volatile at this point of time. So there are various gainers, there are various people who get impacted negatively due to exchange rate fluctuation, and that's why it's the duty of a central bank to ensure that there is no excessive volatility in a currency. If that were to happen, it causes various kinds of economic issues. It leads to stress building up in our overall economic system, and can also at times, as certain crises in other countries in the past have taught us, lead to a systemic economic crisis as well. So this is a subject which seems to be about rupiah and paisa, 20 paisa either, 40 paisa either, but it's actually a very significant impact because it touches almost everyone's life. And in an economy of the size and nature of India, where we import more than what we export, exchange rate management and its impact is a significantly important subject, which I thought that we can discuss and share with you on this episode of Easynomics. Please do write in with your suggestions and whether you thought this was worth your time. Till then, goodbye. I'll see you again. Once again, take care.
If you like the video, do like, comment, share and subscribe.